Welcome to Property Perspectives. Join me, your host, J.G. Kemp, as we embark on an exciting journey through the world of real estate and life. Each week, we explore property, investment properties, investment strategies, and the way it plays every day in our daily lives. So, get ready for an exhilarating ride as we embark on another journey. Today, we have a good friend of mine, Miguel. Miguel is a wonderful mortgager. You want to introduce yourself?
Of course, Jason. And just want to say thank you very much for the invitation.
Thank you for coming.
I'm very glad to be here.
People need to hear from you.
Be part of this journey. But my name is Miguel Rivadeneira. I go by Riv. But I've been a loan officer for about 4 years now.
4?
And it's been great, man. It's been great. I love it. And I've been through the cycle of like everything going great. So now, kind of slowing down, but still steady. So that's good.
4 years. I'm amazed. What's your office name?
So Homeownership Solutions, and that's out of West Hartford.
Got it.
Yeah.
Homeownership Solutions out of West Hartford, Connecticut.
And they've been in the market for about, I will say, over 20 years.
They've been in 20 years.
Oh, yeah.
Okay. So you don't got your own spot yet?
Not yet, but that's kind of what we're looking forward to. So hopefully this year, around June, July timeframe, we'll see.
You're going to get there.
We'll see what happens. But
you're going to get there. I had to have Miguel on because Miguel's a very powerful mortgager. So, Miguel, let's start with where exactly are you from?
So I'm from Peru. So I was born in Peru, and I came to the United States when I was about 15, 16 years old.
Okay.
I went to Buckley High School here in Hartford.
Okay, so you went to Buckley.
I went to Buckley. I've been to every community college in Hartford, or in Connecticut. I even went to New Haven.
Right.
And then I went to Central to do accounting. So I graduated as an accountant. And then I did my master's in finance. So I'm a numbers guy. I love numbers. That's all I can tell you.
I can tell you're very analytical. from knowing you for at least 3 years now. Geez,
Yeah.
So I know you for about 3 years now.
Yep.
And you've been doing it for 4.
Yep.
That's great. So best friends with our broker here, right?
Of course. I've known for over 25 years.
Mm-hmm.
So yeah.
Right. This really proves that it's not what you know, it's who you know.
That's true.
Right? Miguel is actually one of the main reasons I came to 5 Star Realty. We were both working with a good buddy of mine, Tyrone Bell. Shout out to Ty. He was looking to buy a house, and he was living in one of your houses.
Yep, in my place. That's true. In East Hartford.
And he came to me one day and he said, Jay, I need to get out of where I'm at. The landlord is not renewing the lease, right? So I said, so what are we going to do? He was like, I want to buy a house. I said, so what mortgage are you going to use? He was like, oh, the landlord so happens to be a mortgager. I said, really? I said, okay, cool. And then he got the pre-qual. So, of course, I need to talk to you. And the rest is history.
Of course.
The rest is history. We ended up getting this man a beautiful 3-family right across the street, as a matter of fact.
That's true.
100% probably one of the best 3 families I've ever seen in the city. Congrats to him. But you closed that deal.
Yep, and I think now he's looking into buying another property, which I'm going to try to help him out with that as well.
Right.
So we'll see.
That property it was bought for about $410,000.
I think it was one of the at the time.
$410,000. That was 3 years ago.
Yep.
That same property has got to be worth about $450, $460 right now.
Pretty sure. Yeah.
Confident, right? Maybe even $475 to the right buyer, right? So, Miguel, where do you think we're headed with the interest rates right now?
Yeah, well, and I don't know if you've been reading the news or maybe, because I like to see the news and I like to kind of read up on what's going on in the in the world, in the market. So yesterday, as you know, the Feds, they met, okay, and then nothing's changed. So the rates will remain unchanged, but there was a good expectation that it'll come down, by the end of the year. So they're talking about maybe 3 times by the end of the year, which is good. I mean, it gives buyers or seller expectations that things will get better in time. So, today the market was, everything went up because obviously for that expectation that things will get better. I do see things getting better, of course.
Mm-hmm.
I mean, as you know, we haven't really had, gotten this rate for the past 10 years. And there's a lot of people that can't really qualify. I mean, everything's so expensive, as you and I were talking about.
Mm-hmm.
So prices are going up, rates are up the roof, and then, taxes are also up. So everything's so expensive.
Mm-hmm.
And the problem is that people are now making as much to really, go along with, the change, if you will.
Right.
So it is an election year. Things, I'm pretty sure, will get better.
Mm-hmm.
Obviously, as you know, there are a lot of programs, that we offer, and, I'm sure we'll talk about them in a bit.
Mm-hmm. So yeah, there is a lot of programs. That was actually the deciding factor why I left where I was at and I came here. We had a deal on Huntington Street in Hartford, Connecticut.
Mm-hmm.
$315,000, two-family in the North End. This was 2 years ago.
Yeah, probably.
$315,000 in the North End, two-family.
Oh yeah, that's true. I remember.
About 2,400 square feet in the North End, right? And I say that again, in the North End. That was like unheard of. So anyway, the people came with a different mortgager.
Mm-hmm.
This is what blew my mind. We had a mortgager, I won't say the name, out in Avon. Right, and this is, again, it's not what you know, it's who you know, right? This mortgager couldn't get the job done. I don't know what told me to say, let me call Miguel, see what they can do.
Mm-hmm.
And the man got him pre-approved, and it was with no Social Security.
Yeah, we did close the deal, I remember. It was a little tough, but, I mean, we do what we got to do to close the deal, and that's what happened.
Right, and I said, you know what? I'm sold. He had asked me, he said, Guillermo was opening a new office. He said, I like the way you work. I want you to talk to my friend, see if you can get over there. Mm-hmm. Right? So he called me a couple of times.
Yeah, I think it took you a little bit.
Yeah. Because I had been at, the last place, I had been out there. I was like that guy with that company. And I didn't see myself leaving a major to come to a smaller company. I didn't see it. It took him 3 times, and then I met him out in West Hartford at a little spot in Blueback Square, close to Blueback Square, and I liked him. Right, so then we came here, and we hit it off. There was still one more factor before I came here, but I'm here. So that program that you had that got the guy the pre-qual, the loan eventually, was no Social Security number.
Right, so those are the ITINs. So
what is it called?
ITINs. So basically, for any clientele that don't have any, they don't have any socials, because they're probably working towards getting it. But for you to do taxes with the IRS, you have to file for an ITIN, and that's what it's called. So we would basically use that as a Social Security number. But the problem is that the requirements for that it's more complex than if someone has a Social Security number.
Right,
so for instance, you have to have a really good down payment, like 15 to 20%, depending on, kind of depending on if it's a single family or a multi. The credit has to be, obviously up over 680, and not just that, but the trade lines on the credit report needs to have at least 2 or 3. So you need to at least have 2 or 3 trade lines in your credit report that goes back maybe 2 or 3 years, just to kind of have evidence that the guy still lives here, he's got a job, and everything else. So that's kind of, obviously not everyone's going to do that, but we do have lenders that kind of that's kind of what they do. It's non-QMs.
Look, the people need to hear that. We're in America, big melting pot.
Right.
The American dream is to own a home.
That's right.
A lot of people think they can't own a home. And boom, you got this guy who's making that dream happen. You're the dream maker. Yeah, you're the dream maker. So what are some of the programs that you're seeing used most right now?
Yeah, so right now, since, based on what's going on, in the United States, if you go to the South, you're probably going to see the same picture as how you see here in the North. A lot of people don't have a lot of money. I mean, it is what it is. They're getting more in debt, so on and so forth. it is an issue everywhere you go. So there's the program that I see that a lot of people are being, are utilizing is the CHAFA program.
Okay.
That you can just get qualified and you don't have to put anything down. The state of Connecticut is willing to give you $25,000 depending on the area where you are buying, the house. For instance, or it's 25 or 50,000 towards your down payment and closing costs. So basically, if you're buying a house in Hartford, depending on the area, you'll get 25. If you go to Newington, it'll be 50. Glastonbury, $50,000. So that's what I see. A lot of people are taking advantage of that. Obviously, the budget is small, it's limited. So as the city of Hartford, Connecticut, run out of funds, then it'll go away, and then people have to wait until that. Yeah, we'll have to wait until the next year.
More money. They get more money. It's a time-known program, right?
Yes,
yeah,
exactly.
A lot of people are using that. We just had another good buddy of mine, mortgager, also. And we were talking about that program. Very popular program right now.
Yeah, it's very good. And to tell the truth, I mean, it's a lifesaver because a lot of people want to have they want to have their own property, but the problem is it's very tough for them to save up. But they do have everything else. They have a job, they have good credit, but they just don't have the money to kind of put down on a property.
Right.
And this program will definitely assist and help them out.
Which is interesting, right? Because a lot of the times the loans want them to have reserve. They have to have reserve in that with that loan?
No. So basically, there's no overlays with the FHA guidelines or the conventional guidelines. So basically, the only time you'll need reserves is if you're buying a 3-family house. But a 2-family, you don't have to worry about it. A 1-family, you don't have to worry about it. A 3-family, you'll have to obviously come up with reserves.
Got it. What about seasoned money?
Well, you have to have, so the money has to be seasoned for at least 2 months.
That's for the 3-family.
And even with the 1-family, the lender's going to give you a pushback if they see a deposit of $10,000 in your bank account.
Okay.
I mean, they obviously has to be seasoned, unless it's a gift. If it's a gift, then it's different.
Right.
But you can't just show up with your bank statement and say, hey, my friend, he gave me back the money that I lent them last year. And here's the $10,000.
That's an important question, right?
Yeah.
Right, because they want to see your bank statements.
Right.
Right. They want to see how much you got in the bank.
Yeah. And what we try to do, to tell the truth, is obviously guide them to where they need to be. So if I see a large a large deposit in the bank statement, I'll say, why don't we just wait for another month?
Right.
Because all I have to do is just provide those 2 bank statements, and then before that, we don't care. I mean, and that's kind of how we can make the deal work.
Right. I always tell somebody, they're like, I want to buy a house. And I'm like, cool, that's fine. I could find you a house. I'm a listing agent.
Right.
I could find you a house. That's not the problem. The issue is the money, right? If you don't have the money, you don't have the house. So I always say you need to go to the mortgager because they're going to provide you with a good roadmap on the way to get that money.
Yep, a plan in place, and that's what I call it. I mean, as long as you have a plan in place, and to get you there, then you're definitely going to get there if you really want to. So, for instance, I get a lot of clients that their credit score is not that good. I mean, we can help them. It's going to take some time, but as long as you have a plan in place to get to your, where you want to be, I'm sure. But that's kind of what we're here for, to kind of guide them through homeownership at that point.
So you primarily deal with residential loans?
Yeah, I mean, we do commercials too. The last commercial I did was a 6-unit in the north end.
Oh, really?
Yeah, it took me a little, but yeah, I mean, we can do that. I mean, I mean, those DSCRs too. I mean, we do those too as well.
Got it. You keep turning down the 6 families I'm sending you.
I know, it's just the location's bright to me. But we'll
find you one.
Yes,
I'm gonna find you one.
Yes.
I gotta keep digging in the crates. I got a good question for you. So there was just a lawsuit that was won, and it's basically saying that buyers are gonna have to start paying the buyer agents for their services, right? How is that going to work when it comes to the mortgage? Like FHA, they're okay with.
So it seems like because it hasn't really. I mean, there's not a concrete answer, I'll say. Obviously, they want to make everything more competitive. So, I mean, a customer looking for a house can shop around agents and see which one is going to get you a better deal, a better rate, if you will. Instead of maybe 3% or 2.5 per, you can shop around and say, you know, maybe a flat fee of 1,000, and I'll go with that person. So that's kind of where it's at right now. Obviously, competitive. It is it is what it is. But as far as the mortgage goes, I think it'll just be part of the closing cost.
Oh, really?
Yeah.
So, do you think the bank will allow the payment for the buyer agent to come out of closing?
So it'll be I believe it'll be a negotiation between agents.
Right. Well,
to see where things are gonna, you know, and then whatever the buyer will end up paying, it could also be, I mean, it has to be part of the closing costs.
I didn't know that.
Yeah, because otherwise, I mean, how would you do it? I mean, what if the price of the property is 100,000 and it gets appraised by 100,000? You don't have more buffer to play with. So somehow you have to kind of put it into, it has to be part of the closing costs.
Yeah, the tricky part is just like you said, a lot of people don't have any money. So if you deal with a lot of these first-time home buyers who don't have a lot of money, you know, how are they going to pay the buyer agent?
It's very tricky, and I'm pretty sure, I think June or July timeframe is when they're going to have a last kind of verdict of how things are going to play out.
It's going to be interesting how it plays out. I was just saying to myself, I think I might just start getting the ball rolling now. You know, why wait till July for everything to just get figured out then?
Yeah, it's,
you know,
it's crazy. I mean, and the problem is that some brokers are just going to have a flat fee, which will make it more competitive if you were thinking about a percentage. You know, because obviously you can sell a house for 100, but then you can also sell a house for 500. If you have a flat fee, I mean, it really doesn't matter.
Right. Things are going to change. Speaking of flat fees, you guys, you charge transaction fees?
Transaction fees?
Like you charge points.
Yep, right. Yep. So it's part of the yes. So we do charge points, but it's based on how the market is at that point. There's really not a, you know, I wouldn't be able to tell you how much, you know, maybe a point or a quarter of a point is until I see the whole scenario, you know. But we do. I mean, there's buy downs too. There's buy downs. You can buy down points. Right. It's a lot of stuff out there. Right. I mean, and depending on the scenario that I'll get, that's my job to structure the loan in a way that it's going to work.
So, what do you think is one of the trickiest deals you ever came across that you closed?
I mean, tell the truth, all of them are tough because right now there's not an easy deal. I think one of the easiest one maybe is the one I'm closing tomorrow. Yeah, that was. I mean, but the lady she had it all down pack, nothing to worry about. I mean, it was just good. It took me maybe 1 or 2 days. The appraisal came in, very good. The title came in, very good, and now they're ready to close.
That's rare.
That is every single deal that I've done they've been very tricky. And
that's rare.
Yeah, and then you have to go back and forth to kind of see how you're going to structure it and how it's, you know, we're going to get it to the end goal of closing. But all of them are tough to tell the truth. Yes.
So yeah, my 21 years of doing this, I've noticed, and I just said this yesterday to a client, very rarely have I seen the closing date happen on the day of closing. Usually it gets extended. Yeah. Days or a week after.
This one here that we're closing tomorrow, we should have closed last week, so that would have been 3 weeks.
Right.
Since we got, you know, the signed contract. So I think that was the fastest one too. But it was easy. I mean, you know, the credit was good. I mean, she really met all she did it all good.
Got it. So how are you getting most of your business nowadays?
It's word, you know, like, I don't know, to tell the truth. I just get phone calls, get text messages. Hey, Miguel, could you help me out? You know, all thanks to you guys. I mean, you know, you guys are giving me a lot of work, to tell the truth. A lot of work.
It's not just me. It's just
and you kind of do a very good job. Even at 6 in the morning, it's like, Miguel, or 8 o'clock at night, hey, Miguel, can you? I'm like,
yeah, my bad. And
I like it. It gets me, you know, it gets me in line, it gets me motivated.
Yeah. I'll see the do not disturb with a silence note, right? Oh, hit this button if you still want to go through, and I hit it. Right?
Yeah.
What are you doing?
Yeah.
Right. Yeah, how can home buyers best prepare for a mortgage application process?
So one of the best things I think to get you ready to buy a house, I'll say first and foremost is a credit. To me, credit if you have a bad credit, it'll be very tough. You're probably gonna have to end up waiting more time. Credit to me is extremely important. Maybe anything over 680 will probably get you a better rate, will get you eligible to better programs, so on and so forth. And that's a problem that we're having right now with a lot of people getting in debt. The credit tends to go down a little. But yeah, credit to me is important because everyone has a job, for the most part. So that shouldn't really be a problem. The money piece, I mean, we have programs that will, give them the money to put for down payments. But the credit, I mean, that's the problem. But we do have programs out there that will help them with their credit as well. So, but it just takes time.
You got it. One of the things that I'm starting to see that might be an issue moving forward. The one thing I definitely see, right? So I've never in, the time frame that I've been doing is seeing prices go up so consistently in the last 3 to 4 years.
Oh yeah.
Right? But the thing that's going up consistently also is rent.
That's
Right?
true.
So the thing that I see that's kind of like, I'm seeing these multifamilies, they're getting up there. And if they're getting up there, in order to pay the mortgage, you got to have these rents, right, that make it make sense. So now I'm thinking, and a guy I called the other day, I brought this up. He was like, you got these regular people who aren't really making that much more money. Now I'm paying $2,000 for a 3-bedroom, right? So I'm like, yeah, you know what, it kind of makes sense. So usually when we do rentals, we collect 3 months, basically 2 months rent, 1 month security.
Right.
But that's an issue when you get some of these tenants, that can't afford all that money. Maybe they only just got security. Right? So if you got somebody that's just only got security, not even got 1 month rent, how are they?
Yeah, I mean that's a really good conversation. I mean, and what I'm seeing nowadays is that yes, the rents have gone up, and they're very unattainable. To tell the truth, I don't know how people can do it. But then you also have properties that the rents haven't really changed. So yes, perfect scenario. I mean, you may have a 2-bedroom for 2,000. But if you look further, you may get something is willing to do it for 12. So that's the problem. It's very, it's a very tough market out there.
That's a good conversation, like you said. So then, what happens if you get these? So you get these older people that still have some of these
exactly.
multifamilies, and they get ready to sell, and they got these rents that are like $800.
Yeah.
How does that make sense when you're selling something?
I bought a property maybe about 2 years ago, and the person in the 3rd floor was still, she still lives there. Her rent in 2 years ago was $750, and then she was in the property for 20 years. The property practically belongs to her. She really paid it off, but I couldn't. I really haven't been able to increase it to where I wanted.
Yeah.
So she pays $1,000. Which is really low if you were to think about it.
Yeah.
But she's never going to move. So it's really, it's very tough out there. That's really what.
Yeah, it's definitely. So in a competitive housing market, how can a home buyer stand out to sellers?
Yeah. Well, it's a very good question that has a very different answers, if you will. One of the good things I think. Having a really good credit score will get you not only better rates, but it'll get you to a much more affordability, if you will, and also will get you to a conventional loan, if you will.
Conventional,
which if something happens in inspection, FHA has different guidelines, and so does CHAFA. So I guess having a plan in place like what we talked about and being ready to buy a house will definitely get them to a better spot.
So that's a good question. Why are FHA inspections more stringent than conventional?
So I guess to my point of view, the properties have to be livable, and obviously they want to make sure that the property is not going to have any issues. And now the FHA as well as CHAFA, or like CHAFA is giving you say 25,000 as long as you live in the property for 10 years. So they want you to stay in the property and not sell it for 10 years, and that's kind of one of the conditions. And then 10% of that loan, if you will, the 25,000, will be forgivable every year. But they want to make sure that obviously the place is livable. That's not going to have any issues. But I think for the most part, that's really, and it's a government loan. Obviously, as a government, they want to make sure that everything's is good and it's in place.
Got it. So basically, have your credit right, job income, job history. Your loan to debt ratio. What are your loan to debt ratios?
So it all depends on the program too. So FHA, we can go up to 57, the back end, which we don't really want to go that far because then conventional we can go up to 50. In ITINs we can go up to 50. In CHAFA it's a little different. CHAFA and conventional we can go up to 50, but FHA we can only go up to 45. So although FHA, on the other, no CHAFA, you can go up to 57.
Right.
With CHAFA, you can only go up to 45.
Got it. So, with creative financing becoming more prevalent, what are some innovative financing options or strategies that home buyers should consider?
Yeah. So, in today's market, I've seen a lot of DSCRs. So DSCRs is basically, if you have money to put down. They don't look at your income. They don't look at all they look at is your credit history.
Got it.
So if you have good credit, you have some money to put down. All they look is how much the property is gonna cash flow. So if you have, say if you're buying a 3-family house and every single floor is giving you $1,000, that'll be $3,000. As long as the mortgage is less than that, they will give you the loan.
Okay.
Which is one of the best programs, to tell the truth. Now, they don't look at your income. They don't look to see if you're having a job. They just don't care. And those are for our investors,
Right.
that are willing to put, the money down.
So what does DSCR mean?
That's a good question. It's debt something. I've completely forgot.
Got it. Now, I remember hearing about this loan. I think we spoke about that. That comes up a lot, especially with refinancing.
Oh yeah. I mean, everyone who's bought a place 2 years ago with Harmony Lender, and they want to refinance it, and then the property went up in price. So they have the equity on it, so they don't have to really. Obviously, that 20% will cover that equity that's in there. So that's one of the best things. Oh yeah. And we do that all the time.
So you do refis too?
Yeah. Oh yeah. We did. Actually, one of the Harmony lenders, they're the ones giving us the leads. Saying, Miguel, could you help them out? This is very good for DSCR. I bought it for 2 years ago. And then obviously they want them to help.
Of course, they want their money back, right?
Yeah, exactly.
Yeah. Here, give me my money back.
Yeah. But sometimes they don't. I mean, sometimes the clients are not ready to refi. Maybe the property is still, going through construction, even after 2 years. Anything and everything could happen. So
that's true.
Again, as long as you have plenty of place, maybe and that's where I come in. As long as you have a plain place, okay, maybe what do you need? If you need, maybe the first floor still needs to be rented, or the first floor needs to be fixed, or they're remodeling. Okay, how long is it going to take? 2 months, and then we do follow-ups, right? We do follow-ups, and we just try to make sure that obviously the deal gets done, and then everyone's happy at that point.
You're hands-on a lot. Yeah. You're gonna need an assistant soon.
Yeah, well, soon enough. We'll see.
Okay. Well, what made you really want to become a mortgager instead of?
Yeah, to tell the truth, I love numbers. So as I said, I'm an accountant by trade, and then I major in finance for my master's. And not just that, but then I'm an auditor for the federal government. Right. And I've been doing it for 17 years. I do everything with numbers. Numbers to me is, I see numbers and I love it.
Right.
Spreadsheets, numbers, and everything that has to do with calculations and structured things, I'll say. It's kind of what I like. And not just that, but then, I have properties that, and then my friends have properties. My friend has a broker. So it's...
Only makes sense.
it only makes sense. And,
I love it.
And not just that, but our community, I don't think we have a lot of loan officers that speak Spanish. So, it comes in handy sometimes to have Spanish-speaking stuff.
No, you definitely come in handy for me. I can't stand when I get a client that, I don't speak Spanish. They speak Spanish, but I don't.
Yeah.
And now I'm on Google Translate.
That's true. That's true.
Call Miguel.
Yeah, no, but it's good.
Can you discuss some of the different mortgage programs available in today's market? But more importantly, what's the potential home buyers have in order to pick those programs?
Yeah. So for FHA, as you know, is very. We can go anything over 580 on the FICO score, on the credit score. We can do it as long as they have 3.5 for down payment.
Oh, really?
Yes, we can do FHAs. For conventional, it's a little bit more strict. Obviously 680 is what we're looking for the credit score. And you can go as low as 1% on the conventional still. So 1% is good, but then you have to have a good credit score.
So how often are you doing 3.5s nowadays?
Nowadays, tell the truth, we do a lot too.
You still do?
Yeah, we still do a lot of FHAs. I've done a couple of 1% here and there. The good thing about FHAs, obviously, as you know, the rates are better. Rates are better, and the PMI or the MI, the mortgage insurance, is better.
Right.
On the conventional side of the house, is obviously it's more. And again, it all depends on the credit. But then we also do non-QMs, which is basically the SCR. We do ITINs. We do a little bit of commercial here and there. But we try to kind of get ourselves marketed for everything. And as we go through the process, we learn a lot too.
Got it.
And our job is really to spread the knowledge out there that obviously it's really not that tough to buy a house.
Right.
You don't really need to have 20% for down payment. There's a lot of programs out there. All they have to do is reach out to you or all the agents out there. And I'm sure everyone has answers for them.
Right. I always say buying a house is easier than buying a car.
True.
I always felt that way.
Yeah, I think it is. I think nowadays the piece that's taking the longer is actually looking for the house and getting a signed contract established.
Right, that's hard.
And that may take months. I mean, the mortgage piece takes about 3 to 4 weeks, hopefully. But then just getting your house, the one that you want,
right?
That takes more time.
Yeah, that's tough because I heard an agent not too long ago. She was celebrating on Facebook about how she just closed a deal with a client that she's been working with for 2 years. I was like, wow,
that's crazy.
2 years, but that's typical.
But just imagine how much is, I wouldn't want to say wasted, but how much, gasoline, time and stuff.
What?
2 years.
2 years.
Was it worth it,
Was it worth it? At some point you're like, you know what, I got to get something.
Yeah.
Well, for the buyer, it could be very emotional roller coaster, a very emotional ride for them to not have quit and just be like, you know what, I'm just going to rent.
Yeah, no, that is true. But then a lot of people get stuck nowadays they get stuck in the rates. Oh, the rates are too high. I'm going to wait. Well, the problem is that, the more you wait, the worse it's going to get, I think.
Right.
Because things are going to, tend to go up.
It's going to have to.
So what I say is you marry the house, not the interest rates. Because at some point the interest rates are going to come down and you can refi.
Right.
You can refi to a better rate.
Right.
But you already have the house that you want, that you need,
That's a great point, right? That's a great point you brought up, right? Because there's nothing like peace of mind. You were just saying this, right? It's not always the price of the home. If you can afford the mortgage now and you love the home, you can always refinance out.
Exactly. Because the worst thing that you want is buying a house that maybe you get a better interest rates, but it's not the house that you want. And at the end of the day, you're going to sell it. It's like if you at any given point, if you're looking for a house, you like it, and you can afford it, why not? You can refi later,
right,
and get a better rate if that's what you want.
Right. That's it. That's key. That's key. So, you're on a different note, you're on the service.
Yes. So I'm with the Connecticut Army National Guard. Been there for about 17 years. I'm going to go up to 2027. Cannot wait, but and my rank is I'm a major.
You're a major?
I'm a major in the Connecticut Army National Guard, yes.
Wow.
Been deployed 2 times. One of them was in South America, Uruguay, for about 10 months.
Okay.
And that was awesome. And then the other time was in 2017. I went to Poland.
Oh, really?
Yeah, I went to Poland for about a year, and that was very nice.
So a lot of people think when you're in the reserve, you're not going to be shipped off.
Yeah, I've been lucky enough to, go overseas to a very good places. To tell the truth. A lot of people nowadays are going to Europe. I really never had the opportunity to go to Iraq or Afghanistan, although I wish I could have.
I like that.
But it's been great, man. It's been a great career. Yeah, it's been good. My leadership skills, and everything else kind of come from there, because you have to go through schools that kind of teaches us, teaches you that stuff.
So how do you play that when there's like you gotta go, you just kind of gotta drop everything here?
Yeah, well, they give you about maybe 6-7 months, maybe more. So when I went to Poland, they gave us about a year to get ready for deployment, if you will. But yeah, you get everything situated and ready to go.
Nice.
In 2017 that was very good. We'll see. Maybe in the near future I go somewhere else. I don't know.
And you're still okay with it?
I mean, it is what it is. I mean, I'm still part of the military, so
it could happen.
It could happen. There's a potential risk that it could happen, and then I'll never say no to that.
I know that's right.
Never say no to that. So it's good. I enjoy it. Obviously, getting older too. So sometimes going out in the field it's a little painful, but I make it happen.
So what is it that you do over there?
So basically, I'm a signal officer. So basically what, all the stuff that you see here with the cameras and everything that has to do with communications is kind of my field.
Got it.
Everything that has to do with IT, network accounts and printers and all that good stuff.
That's great.
Yeah, so that's what I do. I was a company commander for a signal company out of New London for about 3 years. And then now at the brigade level, and that's when I got promoted to a major. But yeah, so I'm a busy guy sometimes,
Got it. No, you're a busy guy all the time. So I apologize because I know when I do hit you, I'm like, yeah, this guy's busy.
No. It's I like, and I try to be very responsive to everyone. At least say, hey,
You do. So you playing soccer too?
Yeah. I play with Alex every Monday. No, Sunday and Monday.
Now it comes out. Now it comes out.
Sunday, we do have a league, and our team is 5 stars.
Oh, is it?
It is.
It's sponsored by 5 Star.
It's sponsored by 5 stars.
We don't get this. We don't get this online. We don't know nothing about this.
And then Monday is when we get to practice with all of our friends, and
Oh, you practice too.
We have to.
Now, hold on now. This is fun.
We can only get that in practice, right? So
yeah, man. Hey, I can get out there. I can be a goalie or something, a water boy. So it's like a league.
So Sundays is where it's a league. But you don't want to see us play, but be impressed.
It's big stuff.
How good we are.
I can imagine. I can imagine. If you're as good as how you guys move with those numbers, you gotta be good. I mean, 5 star means a lot nowadays, right? So how long is the season?
So it's 8 games, I think, and this is our maybe 4th week. So it's another month.
Oh, so we just started.
Yeah.
Where you play at?
In Glastonbury. So I love soccer. As you know, Peruvians.
I love soccer too.
Yeah, Peruvians. That's kind of the only playable sport.
Right.
The only sport we play.
Right.
Soccer. I mean, every time Peru plays, that's basically where we are.
Right.
Just watching the game.
Okay.
But I've been playing ever since I got here. I used to play in 3 leagues, but now I'm getting older, so
right.
So I can't keep up with young kids.
Mm-hmm.
They have like 3-4 longs, so you just can't do it.
No.
But yeah, so we play in Glastonbury. Upwood is the name of the facility.
Oh, it's at a facility. Obviously, it's not like outside. It's inside.
It's indoor, and we play 6-6. So it's very and the thing is that the ball, the ball doesn't go anywhere. It bounces off the walls. So it's continuous.
Oh, so it's continuous. There's no out of bounds.
It's not out of bounds.
There's no throw it back in.
Well, there is, but not too much.
Mm-hmm.
So if you get tired, you have to sub. It's good.
You playing a striker or defender?
I'm a striker.
You're oh boy.
I've always been. I'm the one.
Yeah. What's that guy's name? Down in Argentina.
Oh, Messi.
Yeah, you like one of him?
Yeah. Oh, I mean.
Yeah, Ronaldo.
Ronaldo's my.
Ronaldo.
Yeah. But
I love soccer.
Yes, I mean, someday you should come watch us.
I do. I would love to come. Sincerely. Sincerely. I'm gonna be. My mind's gonna be blown.
Yeah.
And I'm gonna be like, okay, these guys are actually going to work the next day after this. How do you feel the next day?
It's tough, man. It's tough. My back hurts. Like, I don't know if I'm gonna be able to play this Sunday.
Right.
Because, so in last week I played Sunday, Monday, and Tuesday. So I think I was talking to you and Maria, and then, she was texting me. I'm like, oh, I'm playing.
Yeah, you play soccer. That's where I got it from.
Yeah, but no, yeah, it's tough. And now that, again, getting older, so my back's gonna hurt. But yeah, I mean, I like it, love it. So that's what I do.
Yeah, you got to get a lot of business from.
Not necessarily. I mean, it's just friends. They all know what we do.
It's funny how that happens, right? Like my kid wrestles, and I just don't bring up real estate when I'm around them.
That's true.
You would think you would.
Right. Well, at least talk to them about it.
You think you would, right? It's just like, I don't know, you kind of don't. What advice would you give to a potential home buyer navigating the current real estate market?
Yeah, I mean, reach out to an agent, reach out to a lender, a bank, a loan officer, and try to see if have a plan in place, try to see your possibilities of getting a house. Again, there's so many options out there. I don't know. So many options out there, but you definitely want to get somebody who knows what they're talking about. Yeah. A really good agent that's going to guide them to where they want to be. And it's really guide them through the process. So some people only want to get a one-family house. They don't know what it's like to have a 2 or 3. But then if they really talk to an expert who knows what it's like, then maybe they'll change their mind and look into a 2 or 3. Right. And that's kind of what we are here for. Yeah, right. Get them qualified and get them through that process. But it's really getting everything ready and getting everything where it needs to be. Again, the credit, and everything else.
That's true. That's true.
But yeah, I mean, I cannot stress enough the credit. It's very. I mean, it's one of the. If anything, if I had to turn people down, it's because of that.
Credit. Absolutely, 100%.
Yeah.
But the fact that you said that you can do FHA for 580 with 3.5% down. Some people still got cash, especially around tax season.
Right.
That's
true. That's true.
Still tax season.
Now with 580, of course, there's more risk, and therefore it's the rates are gonna.
The rates are gonna be higher. Yeah. Right. Where are we sitting right now, Ruth?
Well, it all depends. So today, the 10-year yield, that's kind of what I look for. It's a 4.5 in the mortgage. It'll be 2.5 more. We're looking at maybe 6.5, 6.7.
Yeah, you're right around what my other buddy was telling me. That was the other day.
And as you know, it changes every single day.
Every single day.
So last week it was better. And this week, they were anticipating the Fed meeting that happened yesterday. So I'm thinking it's going to come back down a little.
It usually comes down right around this point in every year, coming into spring, going into summer, and then it goes up around September, October.
Yeah.
It's kind of cyclical, so it'll be interesting to watch. Well, Miguel, I appreciate your time, good sir. I think it was fun. You want to tell them again where they can reach you at?
Sure. So Miguel Riv here. My phone number is 860-280-4924. You can reach me via text message. Maybe my email is homeownership.miguel@gmail.com. Or or you can come here 5 stars. I know all the agents. I think by now.
100%. 100%. I definitely refer you.
No, good.
Definitely, you care, hands-on, great guy to know, and you definitely know your stuff, right? And you come from the people. You're about the everyday people.
Yeah, and hopefully the next 2-3 months I'll open up my own thing, and I'll be able to obviously help out a lot better, a lot more.
Hey.
I won't be,
Drinks on you. All right, this ends up another show of Property Perspectives. We'll talk to you soon.